My name is David Cho. You're at Barrons with Adena Friedman. Adena Friedman, of course, is the chair and CEO of Nasdaq. She's one of the most powerful people in finance, so it's such a privilege to have her. She's also a black belt in Taekwondo, so she's powerful in many ways. So please welcome to the stage Adena Friedman. Adena.
It's great to be here.
Yeah, very nice to have you. Let me start with your assessment, your outlook for the economy. Where do you think it's going? You've kind of put out there some more measured comments about what the Fed should do, a little bit of caution. We heard earlier today someone who was more encouraging the Fed to cut rates.
Okay.
But I'd like to hear your view on this, the kind of caution that you're sending to the Fed. And why is that?
Sure. Well, I think first let's just say overall, we come into 2024, I would say, with cautiously optimistic. So we have the cautious because it's still a very dynamic macro political world. There's still a lot of challenges that every economy and every government are facing. And we have to kind of expect the unexpected as we go, in the fourth year in a row of expecting the unexpected. The optimistic part is because of the fact that I think we feel pretty confident that rates are not likely to continue to go up. We also see that inflation is coming down, and it's being relatively consistent in that way. And so those two factors make it so that if you're an investor and you're trying to underwrite risk, you have two of these external factors that are becoming more known. And that helps them then say, okay, well, how do I then underwrite an IPO? How do I look at the future potential earnings of a company? And I have both the cost of capital and the cost of doing business in a more stable environment than they were last year or the year before. And so I'm feeling more confident in being able to project that business. And so I'm ready to put risk capital to work. Hopefully that means more IPOs. So that's the optimistic part. But in terms of rates, I think we have to be very careful about assuming that the Fed's just going to kind of start the glide path too early. They want to see consistency in a lower inflationary environment. I think the worst thing that could happen is that they cut a rate too early, people get overly exuberant, prices come back up, inflation ticks up again, and then they end up having to revert back, or they have to do something that I think would shock the market.
Yeah.
So I think that they're going to be much more likely to be more patient in saying, let's make sure we see this that the inflation environment is continuing to go in the right direction, not as rapidly, but hopefully in a steady manner, so that we can understand that if we make a policy change around rates, it's not going to suddenly whipsaw the market. And I think that's likely to be somewhere, I've said, kind of late Q2, early Q3, more likely to be something where you see, 2 to 3 type of rate increases or rate decreases rather than anything more than that.
That's seems
kind of
optimistic.
I think that's a little optimistic, yes. And I think that would get you down into kind of a 4.5% to 5% interest rate environment, which in this environment is not that's not asynchronous with the overall inflationary environment. So that's how I look at it.
I see. And so you see that staying around for a while, that 4.5%.
And I think that if inflation continues to go in the right direction, they will have more fortitude to continue to bring rates down to something. But I think we should assume kind of, I would say, a 3 to 4.5% in rate environment for the foreseeable future. I mean, if they can get it down to that kind of 3 to 4.5% and have inflation at that 2 to 2.5%, that's a monetary policy that's very persistent and can be very sustainable.
I see. And do you think the zero rate environment, that's kind of a thing of the past?
Yeah,
that era's over.
It's been a 15-year experiment. Right? And we kind of know what happens in those experiments. Now, the economy withstood a very low interest rate environment for a long time because the economy was growing very slowly after the credit. I mean, it dipped, and then it was a very slow growth environment for a long time, and for a protracted period of time. And inflation remained very low as a result. So therefore, they felt that they wanted to continue to have a very easy monetary policy to stimulate growth. Well, we've had a growth stimulant, and we also see that there are unintended consequences to an ultra-low interest rate environment. People are not as discerning as to which investments they choose to take on, and I think that also, generally speaking, you want to have an economy that has rigor, has, I would say, has resilience, and also has a cost of capital that forces some level of prioritization. And so that people make smart decisions, they make long-term decisions, they're making conviction decisions around the growth of their business or the growth of their investments. That's kind of how I look at it.
That makes sense. Let me ask you about Nasdaq itself a little bit. And I'm not quite sure if everybody's familiar, but you've been really transforming the company in quite pronounced ways, made some of the biggest acquisitions in the company's history. Shareholders finally got a sense of just how big of an acquisition Verafin in particular was. In 5-10 years, what is Nasdaq going to be? Is it going to be an exchange, or is it going to be more of an information technology company? Can you explain its trajectory, where it's sort of going?
Yeah, well, we are a technology provider to the capital markets and now the broader financial industry. And part of being that technology provider is providing very advanced markets. And so us as a market operator, that is actually a very big technology challenge, and we are extremely advanced in how we provide our markets to the world. We also provide markets to 100 other exchanges around the world. So we have brought our technology around the world to help stimulate capital markets all over the world. We now also provide a suite of solutions that really focus on liquidity, transparency, and integrity. Our markets are our foundation. We're extremely proud of what we do to serve the U.S. markets and the Nordic markets. And what we do is really provide liquidity, transparency, and integrity. So as we broaden out the solution suite that we offer to the industry, we've gone on those 3 lanes. Liquidity, let's make sure that we provide proper risk management technology to enable the industry to put more capital into the markets and manage their liquidity more successfully, and provide liquidity solutions to other markets. In terms of transparency, we provide very advanced solutions across IR, ESG, and governance to help corporate clients manage the complexities of the capital markets and communicate more effectively with investors. But we also then provide very transparent index products and other investment products. And then I think the third thing is on integrity. We really focus in on solving the massive problem of financial crime. With our anti-financial crime suite, as well as managing the very complex regulatory infrastructure or regulatory reporting requirements that the banks have around the world.
You just had a report on financial crime
We did.
just this week, right?
Yes.
For those who haven't seen it, do you mind just sharing a little bit about that?
Yeah, we worked with Celent and with Oliver Wyman to come up with how do you size this problem? Money laundering and fraud. It's a $3.1 trillion problem in laundering money around the world through the financial system, and it's a $500 billion problem in fraudulent transactions that occur in the financial system. That means, and then you also have other ancillary nefarious behaviors as well. So you're looking at almost a $4 trillion problem. And it is, the banks have been put on the front lines to try to solve this problem, but they can't do it alone, and they frankly even can't do it just amongst themselves. They need to have a public-private partnership. So the study was a lot about how do you create collective action, collective solutions, how do you use technology to be much more effective at it, and what are the policy decisions that need to be made to make the industry a lot more effective in solving this problem.
Got it. So in 2020, you acquired Verafin.
Right.
And it was about if I recall, just short of $3 billion.
Yeah, $2.75 billion.
$2.75 billion. And so they're providing solutions in this space. What part of financial crime is growing the fastest that will benefit that unit the most?
Well, I would look at it more, what are we doing to solve the problem better than everyone else?
Okay, that's fair enough. All right.
That will grow the business the most.
But what's the problem out there that's scaling?
So it's really interesting. Fraud moves. So I'll start with fraud, because AML is a giant, very complex problem. And so we'll talk a little bit more about that. But on the fraud side, it's just people stealing money out of other people's accounts in lots of different ways. And you've got romance scams, elderly abuse, just hacking, cyber theft, other things like that, business email compromise, wire fraud, check fraud. So, catch me if you can. It's starting to happen again, right? So that's a U.S. problem. We still use checks. But it is and what's really interesting is as you get better, let's say, at combating wire fraud, which our solution is very good at, then the thieves are very, very nimble. And they'll then say, well, if we're kind of closing that door, we're going to open this other one. And check fraud has actually become a bigger issue in the United States in the last year. So super interesting. But what we do is actually solve all of those issues. And the way that we do it a little differently is in the United States, which I think is something that should be followed around the world, is that the banks are allowed to share data with a neutral third party for the purpose of crime management. And so we pool data across 2,500 banks that represent $6 trillion in assets. We get millions and millions of transactions, and we do use AI engines to create typologies that are specific to the different crimes. So like a romance scam, they behave differently than someone who's elderly abuse. They behave differently than someone who's perpetrating human trafficking, things like that. So we build typologies that are specific to the way that they behave in the financial system. And we run those engines to make the alerts smarter, to cut down on the false positives that the banks have to manage, and to make sure we actually root out more fraud. So that's a pure, kind of really solves a major, major issue to the consumer and the consumer experience in the banks. And then, of course, it saves the banks a lot of money.
I see. So is that part of Nasdaq's business a higher, faster growing and a higher margin than kind of your foundation index business? Like, in other words, if I was a shareholder of Nasdaq, and over the past year it's been down, but in the past 6 months, as Verafin's results have sort of emerged, it's been a very good stock, actually. Is that the trajectory that we'll be seeing out of Nasdaq, kind of this fast-growing, higher-margin business?
Yeah, I actually would say our margin we have a wonderful business. Sure. We're super scaled, and therefore we deliver a very strong margin in general. And so the anti-fin crime suite and our broader RegTech and capital markets suite of technology today is actually is going to be it's growing the fastest in the company. So anti-fin crime in general is an 18 to 23% grower, but the margin profile is a little bit lower because we're actually investing a lot in the platform to drive more and more growth. So we're able to leverage margin that might be in other parts of the business to really invest there. And then across the Adena business, which is the other business we bought, that's actually also
that was a $10 billion.
Yeah, that's a $10 billion acquisition. That's a 10+% grower. We're kind of in the low teens, and in terms of a grower, and has a margin profile that's actually consistent, if not even a little better than the overall Nasdaq margin. So two very, very exciting ways for us to continue to expand the platform, the growth, and the margin.
Okay. I think we don't contract with Verafin at Barrons, and I will make sure we don't send a check to the buyer. We'll pay them another way.
It was actually funny. At one point, one of our own employees had someone attempted to kind of pretend who they were and steal money through a check, and their bank called them and said, I don't think this is yours. He said, no, it's not. And he said, which system did you use to catch this? And he said, oh, we used Verafin.
I see.
So that we were actually excited about that.
Let me shift gears a little bit. So right now, if you open ChatGPT and you ask it, what investment should I make? Where should I put my money? It actually, the makers of that prevent an answer. They don't want generative AI.
That's because we'd have to be registered as
an
investment advisor.
So right now that doesn't exist, but project a little bit into the future. It may not be picking stocks, or it might be, but how do you see generative AI in particular playing a role in how we invest our money and how Americans invest?
I think it's a great question. I think that you can see it as a companion. I think in general the AI is going to be a companion for a long time, meaning there's nothing better than human judgment. And at the same time, to have a companion that can compile an enormous amount of information and give it to you in a very curated way that allows you to make a smarter decision, that's, I think, a companion that every investor is going to want, right? So they can take, we have a lot of alternative data that we provide to the industry. There's a lot of, other, what I would call leading indicators in terms of business performance, in terms of economic performance that the AI engines can compile. They can look at commentary on earnings scripts. They can look at a lot of different things to try to say, here's kind of a way for you to consider this investment. Here's all the information. It's curated. Here's all the source materials. And here, therefore, we can make a smarter decision faster. I mean, that would be I would say, version 1 of an investment assistant. I'm going to call it that. I don't know if everyone's called it that before, but an investment assistant. Right now. There we go. But I think that's just the early stages of what the AI has the potential of doing.
But what are the dangers that, retail investors or even some financial advisors, what should they look out for? as this kind of becomes integrated into
Okay,
our
so
investment
there's a
process?
couple of things I would say. I'm going to say trust but verify, but I would also say I don't know whether the AI now is completely trustworthy because of this issue of hallucination. So you want to make sure that when it's pulling information in, it's coming from known sources. So here, please pull from these sources to give me this information, number one, and please give me all the source material, like reference all the sources, cite it, like a term paper, so that you cite all the source materials so that you know that it's pulling factual information, and then recognizing it as an assistant, not a decision maker, it allows you to kind of make your own judgment on the back of what it's been able to find. So I think those are the things to think about. It's that verification is super important, that judgment super important, but that assistant could make decision making faster and better.
Yeah, you use the word hallucination. It doesn't mean that AI is smoking pot. It means, can you explain?
Sorry. So AI, it's very interesting, and if you ask the makers of the LLMs, they're still investigating why this is happening. But there are moments when the LLM, the large language model, the AI, will essentially make up an answer. So you have now, if it's given its own, if it's up to its own volition, and it can search anything and everything, it sometimes will give you an answer that's not the truth. And it's a very interesting thing, and it's a prediction model. So it's not even, you kind of sit there and see, and they really are trying to understand what I would call the root cause of this issue with the prediction model. So, but the way to solve that is you want to use a large language model in terms of the value of its prediction capabilities, but you want to put it against known source material so that you then make sure that it only can draw from that source material. You can code it so that it basically to prevent that.
Yeah, that's very interesting. One last topic I wanted to just cover is, Nasdaq's had a very strong commitment to DEI principles. I believe you're one of the ones that has basically asked the companies in your index to reveal what it's doing about DEI on its board in particular, if I'm understanding it correctly. Not everyone was happy with it, but you sort of stood by that. DEI is going through a moment now with Harvard and everything that's been going on. There's been a forceful pushback. How do you make sense of what's happened over the past couple months, and how has that made you think or not rethink your sort of commitment to DEI?
Well, we are very committed to what we've done
Sure.
and how we're working. So I think the first thing is, let me explain the rule. So
Sure.
the rule asks every company that's listed on Nasdaq to provide a table based on self-reported information from each board member as to the composition of their board from a diversity perspective. And then it encourages companies to consider having two diverse board members on their board, one female and one underrepresented minority if it's a U.S. company. But the caveat to that is if they don't have that, they just have to explain why not. So, and they have 4 years in which to kind of get to that state, and they provide the table, and to the extent that they want to provide an explanation, they do. And the explanation could be anything, because we're not there to judge the explanation. What we're trying to do is just provide investors with consistent information that allows them to make a discerning choice. And governance is a factor in terms of investment decision making. And when you think about governance, you want to have diversity of experience, expertise, outlook, but you also want to have a board that represents your clientele, that represents your employee base. And so those things are all factors that I think help investors make smarter decisions. And this is a rule that we proposed in 2020, was approved in 2021, and now we're 2 years in. Oh gosh, we're almost 3 years into it. So it's working. So that is, I think, something that we feel that provides investors better visibility and better information. From an overall perspective within Nasdaq, we operate with the principles of diversity and inclusion, and we think that that's important. It makes us a better company. We do things in terms of just creating the right culture, creating the right forums for all of our employees to feel included through our employee networks, through our programs, through our management training, and then just to make sure that we are always focused on it, but we're doing it in a way that's sustainable, that's long-term. And the last thing I would say is, as a leader of a company or the leader of an exchange, we have to look at things over a long-term period of time. When we make the types of decisions we're making around rules or culture, these are long-term decisions to define the future of the markets, the future of the business. And I think in that context, we feel very comfortable and confident in what we've done.
You know, as events have folded over the past couple months at Harvard, and there's been this kind of Twitter conversation that's, you know, typical of social media, but, you know, it's tied into the presidential election. Have you had conversations within the company? Have those only served to reaffirm your commitment to it, which I'm guessing is the case, but have you just kind of paused and thought a little bit about what's been going on in this space?
I mean, I think it's always interesting, and you have to kind of make sure that you're looking at the context of how it could impact us. But I would say that our conversations are reaffirming that we're doing things the way that we think creates a long-term culture, that creates a long-term, these are long-term decisions that are the right decisions. And I think one thing I would say is with the diversity rule, there's been some court challenge, but we've actually won a case kind of supporting the rule. So we do feel very good about it. Being a disclosure rule as a private actor with investor demand asking for this is something that we think supports transparency, and I think that's important.
You know, last question for you. You know, at Davos, I've been having many conversations with many CEOs, and there are just two that really stand out. One was I sat down with the CEO of Suntory, who's one of the few women CEOs in Japan, and another CEO of Yum Brands China, who's also a woman. She said there are actually many CEOs in China who are women. In the United States, United States is sort of making slow, but, you know, mixed progress on this front. What would you know, these are newly appointed CEOs. They haven't been around as long as you have. What kind of advice would you give them as they kind of take on this role? Is there anything you can share about your experience at Nasdaq that might help them?
I mean, first of all, I actually am not at all surprised to hear about that comment from the Yum Brands CEO. I think when I've been in China, I've been going to China for 20 years, and yes, you know, when I meet with senior executives and companies in China, it's very often a woman. So it's definitely more integrated into culture. I think that with regard to the U.S. and Europe, I personally think, first of all, at the end of the day, the people who are in the seat are the best people to take that company forward, and just, you know, view us as CEOs like every other CEO who's there to drive future value. And I actually think it's become a much more egalitarian environment. I've never felt disadvantaged or different. I've just done my job. And I think if you just focus on that, you'll be successful. I don't know how else to say it. That's
great advice.
been my experience, yeah.
Well, Adena, thank you so much for spending the time with us. It's great to see you again, and it's just amazing to see the transformation that's going on at Nasdaq. And we really are grateful you spent the time here.
Yeah, thank you so much. This has been great. Thank you.
Okay. Then can we give a round of applause for Adena?